3 private companies know your name, your address, your social security number, every loan you have ever taken, every payment you have ever missed, and whether you paid your phone bill 6 years ago. You did not choose them. You cannot opt out. And they use all of that information to generate a 3-digit number that determines whether you can rent an apartment, buy a car, get a mortgage, or, in some states, get a job. That number is your credit score. And here is the part that should genuinely bother you. It is not calculated by the government. It is not calculated by your bank. It is calculated by private companies using a formula they do not have to share with anyone, including you. And welcome to the credit score system, where your entire financial life is summarized into a number you had no say in, by companies you never agreed to do business with, using rules they get to make up. Let us start with who these companies actually are. There are 3 of them: Equifax, Experian, and TransUnion. They are called credit bureaus, and their job is to collect information about how you borrow and repay money, then sell that information to anyone who wants to assess your financial reliability. Banks buy it before approving loans. Landlords buy it before renting to you. Insurance companies buy it to set your premiums. And yes, in many U.S. states, employers are legally allowed to buy it before offering you a job. These 3 companies generate reports on the financial behavior of virtually every adult in America. Nobody elected them. Nobody appointed them. They exist because the credit industry found it useful to have someone keeping score, and these 3 companies got there first. They are not government agencies. They are not regulated the way banks are. They are private businesses, and their product is information about you that you never knowingly provided to them. Now here is where it gets interesting. Your credit score is not one number. It is dozens of numbers, maybe hundreds. FICO, the most widely used scoring model, has over 40 different versions. There is a FICO score for mortgage lenders, a different one for auto loans, a different one for credit cards. The mortgage lender pulling your score and the car dealership pulling your score are often looking at completely different numbers calculated using different formulas. Then there is VantageScore, a competing model created by the 3 bureaus themselves, which calculates things slightly differently again. The same person, the same financial history, multiple different scores, and they can vary by 50 to 100 points depending on which version a lender happens to use. So, when someone says, "What is your credit score?" there is no single correct answer. There are dozens of possible answers, and you probably do not know which one the lender is looking at. Here is the part that makes it genuinely absurd. In a 2024 study by Consumer Reports and WorkMoney, 27% of people who checked their credit reports found errors. Accounts they did not recognize, payments wrongly marked as late, debts that belonged to someone else. 1 in 4 people, with errors that could directly affect their ability to borrow money, rent a home, or get a job. And here is what happens when you try to fix them. You file a dispute with the bureau. They are legally required to investigate. And in most cases, their investigation consists of sending your complaint back to the lender who reported the information in the first place and asking them to verify it. The same lender whose data caused the error, confirming their own data. In 2025, Experian resolved less than 1% of credit reporting complaints in the consumer's favor. TransUnion's resolution rate fell by 50% over the course of the year. Since Trump's inauguration in January 2025, more than 2.7 million credit reporting complaints have been submitted to the Consumer Financial Protection Bureau and gone without resolution, because the CFPB, which was designed to police these companies, has been effectively shut down. Your credit score has an error. You cannot fix it. And the agency that was supposed to help you is a zombie. And it gets worse. In 2017, Equifax, one of the 3 companies that controls your financial life, announced a data breach that exposed the personal information of 147 million people. Names, addresses, dates of birth, social security numbers, driver's license numbers, almost half the adult population of the United States. The breach happened because Equifax failed to patch a known security vulnerability. They had been told about it. They had 2 months to fix it. They did not. The settlement cost them up to $700 million. That sounds like a lot. Equifax's revenue in 2024 was approximately $5.3 billion. The settlement was roughly a month and a half of revenue. 147 million people's most sensitive financial data was exposed. The company that lost it paid the equivalent of 6 weeks' income and kept operating. Nothing fundamentally changed. So let us talk about what your score is actually measuring. A FICO score is calculated based on 5 factors. Payment history, whether you pay on time, counts for 35%. The amount you owe counts for 30%. The length of your credit history counts for 15%. New credit applications count for 10%. The mix of credit types you have counts for the remaining 10%. This sounds logical, and mostly it is. But here is what the formula does not measure: your income, your savings, your assets, whether you actually have money. A person with $200,000 in savings and zero debt history has no credit score at all, because they have never borrowed money. A person who has borrowed and repaid on credit cards for 6 years, regardless of how little they earn, has an excellent one. The system is not measuring wealth. It is measuring behavior within the borrowing system. If you have never participated in that system, either because you chose not to borrow or because you were never given the option, you are invisible, and invisible means denied. Here is the final layer. The credit score industry generates billions of dollars every year. Equifax alone made $5.3 billion in revenue in 2024. They make money selling your financial data to lenders, landlords, insurers, and employers. They also make money selling it back to you, charging you a monthly subscription to monitor the very data they collect about you without your permission. You are the product and the customer simultaneously. You did not sign up for this. You did not agree to it. Your data is being collected, aggregated, scored, and sold. And the only way out is to not participate in the modern economy at all. So, what is the actual lesson here? The credit score system is not inherently evil. Lenders need some way to assess risk. That is a legitimate problem that needs a solution. But the current solution, 3 private, unaccountable companies with a combined grip on the financial lives of nearly every adult in America, using proprietary formulas, making errors that affect millions of people, failing to fix those errors, and losing half the country's data in a single breach, is not obviously the best version of that solution. It is just the one that exists, and it is very profitable for the people running it. So here is what I want you to think about. Should 3 private companies have this much power over this many people's lives? And if the answer is no, who should be doing it instead? Drop your answer below, because I think this is one of those topics where most people have a strong opinion the moment they actually understand the system.